Welcome back to TechKidFX for another Polygon Matic price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Polygon Matic chart, which at the time of this recording is holding above the 20-day MA here on the 4-hour chart, which is now acting as support for us to continue gearing up. At the time of this recording, we have also managed to break above a key area of resistance at around the $1.17 mark, and after managing to break above that key area of resistance, what I'm watching next is a retest of that key area of resistance, and once the retest is in and a success, then we can continue gearing up and continue unlocking even higher prices. We have also continued to obey the Elliot structures, where we had been seeing a bit of a breakdown to the lower side in the formation of these higher Elliot wave count 2, and we have managed to get into the minimum retracement area, which lies between the $1.17 mark and the $0.9372 mark, in a move that has now given us a low at around the $0.9423 mark. And after seeing that low down there, we saw the formation of this long wick to the lower side, which was an indication that the buyers were trying to get a little bit stronger. And you can see that after seeing the formation of this long wick to the lower side, we have been seeing a bit of a bounce to the upper side in a move that has now given us a break above the 20-day MA and also a break above a key area of resistance at around the $1.17 mark, in what could be the start of an impulsive wave to the upside in the formation of these larger Elliott wave count 3, which we expect to play out after seeing the formation of a larger Elliott wave count 2. And before I get further into the technical analysis and also give you my next price targets to the upside in the formation of these wave 3, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a recap of what has been happening, where you can see that after making our low at around the $0.32 mark, we started this massive bounce to the upper side obeying the Elliott wave structures, where you can see that I have this Elliott wave structure in yellow having the wave 5 giving us a peak at around the $1.3 mark. And after seeing the high at around the $1.3 mark, we started a corrective structure to the lower side, where you can see that I have this ABC corrective structure in a move that gave us a low at around the $0.74 mark. And after seeing this 5-wave structure and also this ABC corrective structure, we completed this 1-2 setup to the upper side. And after completing that 1-2 setup, we started another 1-2 setup to the upper side, where you can see that I have this Elliott wave structure in yellow having that as the first wave, giving us a peak at around the $1.57 mark. And after seeing the high for that wave 1, we started a corrective structure to the lower side in the formation of this wave 2, and using the Fibonacci's connecting them from the low of the first wave to the high of that wave 1, I was able to come up with a minimum retracement area in the formation of that wave 2 between the fib level 0.38, the fib level 0.5, and the fib level 0.78, which lies between the $1.16 mark and the $0.927 mark, which is a target area we have fully maximized. And I believe that whatever we are seeing at the moment is the start of that impulsive wave to the upside in the formation of that wave 3, since we have bottomed out in the formation of these higher Elliott wave count 2. And by first sketching out a target area to the upside in the formation of that wave 3 by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $2.2475 mark, and that is the minimum that we can expect this higher Elliott wave count 3 to the upper side to do. And because of the impulsive nature in the formation of that wave 3, I'm also expecting to see a 5-wave structure in formation within the formation of that higher Elliott wave count 3, where I'll be expecting the formation of this wave 5 to give us the high for that wave 3 and also fully maximize our target areas to the upper side in the formation of that wave 3. And I believe we are seeing such a scenario over here, and that is better seen on the 1-hour chart. So jumping to the 1-hour chart to get to the micro Elliott wave count that we have in the formation of that larger Elliott wave count 3, here on the 1-hour chart, you can see that after making our low at around the $0.94 mark in the formation of that wave 2, we started this massive bounce to the upper side obeying the Elliott wave structures, where you can see I have that as the first wave, then we saw a corrective structure in the formation of that wave 2, then we started this impulsive wave to the upside in the formation of this wave 3 in a move that has now given as a peak at around the $1.19 mark, and sketching out a target area to the upside in the formation of these higher Elliott wave count 3, that is of this Elliott wave structure that I have right here in red, by connecting the trend based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, and that is at around the $1.2203 mark. So there are chances that now that we have managed to break above a key area of resistance and we are holding above the 20-day MA here on the 4-hour chart and also on the 1-hour chart, there are chances that we have the support that we need for us to continue gearing up, see a retest of this key area of support, that is that key area of resistance, and the moment the retest is in and a success, then we can continue gearing up and fully maximize our target area at the fib level 1.618 and also give us the high for that wave 3. And once that happens, then we can expect a bit of a corrective structure to the lower side in the formation of that wave 4, then continue gearing up in the formation of that wave 5. And once you see the formation of this wave 5, then we can term this 5-wave structure to the upper side as a larger Elliot wave count 1 to the upper side. So that is what I'm expecting here on the short-term scenarios. But you also need to be prepared for a worst case scenario in case the retest is not a success. So in case as we try to have a retest of this key area of support, the retest is not a success and we lose the 20-day MA here on the 1-hour chart and also maybe on the 4-hour chart, then there are chances that we might have seen the peak in the formation of that wave 3 at the high that we made at around the $1.1996 mark. And there are chances that in case the retest is not a success and we lose that key area of support, then we might be seeing a bit of a pullback to the lower side in the formation of that wave 4, because there are chances that we might not fully maximize our target area to the upper side in the formation of that wave 3. And if that is the case, we can sketch out a target area to the lower side in the formation of that wave 4 by connecting the Fibonacci's from the low of the second wave to the high of that wave 3 that we have at the moment at around the $1.1996 mark, and that gives me a minimum retracement area between the fib level 0.382 and the fib level 0.5, which lies between the $1.1188 mark and the $1.0939 mark. So that is the minimum that we can expect. That is in case we lose that key area of support and also lose the 20-day MA here on the 1-hour chart in what could be a breakdown to the lower side in the formation of this wave 4. But as long as we are holding above that key area of support, then expect one more high in the formation of that wave 3, fully maximize our fib level 1.618, and once the high for that wave 3 is in, then from there we can expect that retracement to the lower side in the formation of that wave 4. So continue watching the 20-day MA here on the 4-hour chart and also our key area of support at around the $1.17 mark, because in case the retest is not a success, then there are chances of having a bit of a pullback over here back to the area between the $1.011, the $1.11 mark and the $1.09 mark in the formation of that wave 4. So that is all I have here on the short-term scenarios. And getting back to the 4-hour chart to take a look at the indicators, on the RSI, we are trading at around the 62 mark, meaning we have massive room for us to fully support higher prices. But in case the breakdown continues, that movement will still be supported on the RSI. Also taking a look at the MACD, we have been able to print a bullish cross, fully supporting higher prices here on the charts. So let's be patient and see how that plays out, and I'll be keeping you updated.